Hello everyone and welcome. My name is Tim from the Camp Compound and it's time for our free version of our daily technical analysis videos. Now the market is in a bit of a weird spot and we have many situations to cover, so let's get right to it. I have in front of me the Bitcoin US dollar 1-day chart as per usual. And we see this beautiful blue line running straight across it. We see that this used to be our support here over the past couple of months, since June approximately, properly since September, and we have broken through. That is no surprise, but this will now be our resistance, and at time of recording that would put us at a resistance of about, well, just under 19,000. Let's say 19,000 to make it easy. And we have a bit of a downtrend right here, which would bring us to about, well, just under 21,000. So we'll just say 21,000. Now, this will probably be our resistance if we do go up, but I want to show you something more important if we zoom out. Generally speaking, I want to go through this scenario first, and then we'll cover a couple other ones, and then we'll go into the rest of the market. So what I want to show you is that there is an important support here at around 12,000, followed by another important support at around 13,000. This is our next major support area, but that also means that if we lose 16,000, that we will get pulled towards that like a magnet. Now, we also have, if we go further down, it's not something that I want to think about, but something that we have to think about. If we go further down, we see here that there is another trend. I believe I drew it on a log scale, so it's a little bit off, but it's about the general sentiment. So we see right here that there's another trend upwards, and that would bring us at about 6,000 to maybe a bit further up down the road. I actually think we should pull it up a little bit, so it's more about 7 to 8,000 approximately. Now, if we zoom back in just a little bit, hope I'm not giving you too much whiplash with zooming in and out all over the place, we also see that Bitcoin on the daily is making a symmetrical triangle like this, and that would tell us that, well, that is generally speaking a bearish continuation pattern. So if we measure it, this is the pole approximately, that would bring us at about another $5,500 lower. So if we put that in the chart, that would bring us about here at 11,000, which would make sense. It is just under this support. That would probably also let us, or allow us, to flash crash towards this trend, tap it, and then start to move back up. Could take about a couple of months to actually fully flesh this move out, because we'll hang around here for a while and it'll take a moment for us to break through, etc., etc. And we also see that tomorrow will be make or break day, or, well, actually Saturday might still pull over to Saturday on which way we're going to move. Now, what would be the best way to put as many people into a post-traumatic stress disorder for the markets as possible, which is generally what the market does, because it looks easy, just, buy low, sell high, but don't forget that financial markets are made to fool about 90% of the people. That's why it's so hard for people to become proper traders. So what would be the way to really, really scar the most people and just make it the least amount of fun for retail traders who don't know what they're doing? That is, if we move up to this trend line, first here, I'm going to change the color in a second. Then we move back down towards, well, let's say this support area, maybe hang around a little bit, move up, move down, tap again, then quickly tap that 8,000 and then start moving back up. That would really mess with people's heads, their feelings, and would really stop everyone out who is not hardcore convicted into the proper use case of Bitcoin of the coming, decade, century, millennium, whatever. That is kind of what I think would be most likely, because it hurts the most people, which is not a great way to think about the market, but it is kind of the way it works. So let's make this another color, make it clear. We'll make it like shiny white. It is white. Oh, strange. It looks a little weird. It's because of the opacity. There we go. So that is kind of what I think would be one of the major cases. Now, what is another case which is not as horribly depressing? That is if we move over to the weekly chart, one of my favorite charts, And well, let us actually move the opacity back down because I want to show you other things. You can take out the arrows. There. What we see here is we see a lower price, and then we see here a higher RSI. So if I make this a different color, I do hope that my cat is not making too much noise because he's definitely in a bit of a mood. And of course that mood only started when I started recording, which is, you know, par for the course. And here we see the low in the RSI, which is moving up. Now generally on the weekly chart, a bullish divergence is really, really strong. It's a very strong signal that we might go higher. And we've also seen quite a volume spike, not so much on Bitstamp, but it is still definitely noticeable in this week. So that would mean that we might just have enough volume to move back up, because we really have to break through this before we can really start to say we might move up for a longer time. So we have to break through this line here. We might just tap around a bit between these two, let's say, trend lines before we move up, move towards like the 24,000, come back to, let's say, 22 approximately, and then we can kind of start moving up. In that case, we'll actually probably move towards 28,000, move back a little bit, then hang around the 30,000 for a bit, and that would be the other scenario. Oh, there we go. And now we can up the opacity a bit. There we go. This would probably all take a while because the sentiment of the market is really thoroughly damaged. People are really kind of done with it all, you know, with all the ups and downs and centralized people. And the centralized institutions this cycle that have kind of messed it up for all of us. And frankly, this is not a popular topic, but regulation to a certain extent would really benefit cryptocurrencies, especially for centralized anything, really anything where there's a couple of people at the top who can make bad decisions or good decisions. As long as there is transparency and as long as it doesn't halt the innovation for decentralized applications. So for instance, an FTX would have to quarterly or biannually or annually post their books so people can look into it. Basically open source. Don't trust, verify. The mantra of cryptocurrency. Show us what's on your books so that people can have a look at it and so that we know whether you're doing something sketchy or not. That is kind of the idea of regulation. Now, there are, of course, regulations that would ban proof of work, that kind of things, and those are bad. Those are big no-no. That is what we have to look out for as a community. But those are two very separate topics. That is just something that I wanted to share, because we are definitely going to see regulation over the time to come, especially in the fallout of this. This is what 9 billion 9 billion customer funds that were just kind of evaporated. That's not okay. And there's probably a lot of people who are going to agree with us that that is not okay and that they want to get some framework into that. Now, these are the two main ideas about Bitcoin. What would be a third one? Because, you know, up, down, sideways. I think these two are the most likely. I am kind of feeling the going down one more, the downside scenario, but I have to admit that there over the on-chain analytics and everything is looking kind of strong, so there is some merit in the upside potential. If we go back into the daily time frame, we can kind of see that what kind of time frame this would take. It would definitely not be this will probably not happen over the course of the rest of 2022. It will probably also have a similar timeline as this. That sideways, well, kind of, it is kind of self-explanatory. We'll probably just keep going sideways for a while, just bleed out probably for then like a couple months, maybe until March, before we slowly start grinding back up in just a general bear market fashion. Now that we've had that, let's have a look at Ethereum. Ethereum is doing fairly similarly, honestly. We see a similar sort of line in... Oh, this can go actually. There we go. We see a similar sort of line since June approximately. It's not perfect. I think I drew this on a log line. That's better. It's not perfect, but you see that Ethereum has lost it. It has broken out of its triangle to the downside. It's not a perfect triangle. We've talked about this yesterday on the premium section. But it's not perfect. It's not great. It could go lower. That's kind of it. I also don't want to keep this going too long because I know that, attention wanes. So this is basically a proxy for the alt market. Alt market is not doing too great. Bitcoin is trying to kind of recover a little bit, so we see that back in the ETH BTC chart as well. This is kind of a proxy for the alt market. If Ethereum is losing steam against Bitcoin, alt markets are as well. We can see that in the Bitcoin dominance. Similarly, it's broken out of its downtrend. It's going back up, probably being pulled towards about 41.5%. That's kind of the next big resistance area. And depending on what the USDT dominance does, so basically the US dollar dominance within the crypto market, the altcoins for the complete market will rise or fall with it. So that's kind of what we're looking at. It is a bit of a gray area right now, whether we are going up first or whether we're going down first. So that is why we're a bit careful. We've got some positions, and of course we have our wonderful programs running, which are just doing perfectly in this time of volatility. I'm very happy with it. So that is that. There are some interesting cases to look at, like DYDX is coming back down perfectly, just like we thought it would. Now it just has to go a bit lower towards the $2 or the 1.9 preferably, and that would be great. We could get started. Solana is slowly looking like it wants to lose its support. If that does, we could go lower like we talked about yesterday as well. Probably towards the 6 to 8 like we talked about. So that would kind of be my next targets to kind of scale in to have a good idea. I do, by the way, think that Bitcoin will survive over the coming decades. So Bitcoin right now for me is just very nice risk reward. Solana is a bit harder to gauge. So like Bitcoin, I would be comfortable with having a big stake of my portfolio in it, like 20%, 25%, 50%. 50% is a bit much. Maybe 50% split between Bitcoin and Ethereum. But Solana, if you have a 4% allocation, that's fine. Then a couple of trades can easily recoup if you make a mistake and if Solana just tanks down. It happens to the best of investors every now and then, but that doesn't mean that you should go whole hog on everything. We do have AVE over here, which is kind of hanging around at our entry, which is fine. It's still holding its support. I'm very proud of AVE. It's doing pretty well. It's still trading very cleanly. It does kind of look like it might want to break down because we have this kind of descending triangle, so be careful with that. But on the other hand, volume is lowering, so we'll just have to see what Bitcoin does. Now, hopefully you have an idea of what is to come, have an idea of what to look for, and not to get caught off guard if we do start bumping up again. Now you know what to look for. So, if you found this interesting, do feel free to have a drop by in our Discord, say hi, ask me any questions that you have, or if you want to know what all this premium stuff is about, what we offer, have a look at the website. And I hope to see you soon. And, hopefully I've educated some and I've helped a little bit alleviate the stress. So, with that said, I'm wishing you a good weekend ahead of time, and I'll see you next time. Bye bye!